So today I'm with my friend. Her name is Sylvia. She's a beginner in this investment journey. What are we doing today? We're going to be answering all your investment related questions. I'm sure that at the end of this video, I'm going to answer that question on your mind. Like, if you have any questions that you think that you want to understand how investment works, we'll answer something exactly like that or something related, right? So at the end of this video, I'm pretty sure that you will learn how to invest your money, how to grow your money in 2026. In fact, most importantly, how to avoid investment mistakes or scams, right? Yeah. So if you're coming here for the first time, my name is Onyinye. I'm a chartered accountant. I have over 8 years experience in the financial service sector. Oh, I also had an MBA in finance and investment. Right. And I'm a chartered bank assistant. Yeah, that's right. Okay. Sylvia, let's get started.
So I'm a student, and most of my incomes, if not all my incomes, are from my allowance.
Okay.
So let's just assume for beginner friends, because not everybody. Let's just say my allowance is 20,000 naira per month.
Okay.
How do I invest it safely? How do I save and invest?
Okay. So the first things first is that if you're a beginner in investing, I usually advise starting with the low risk or zero risk investments. The investments, they are low risk, the investments, they are high risk, the investments, they are risk free. When we say risk free, means that there's no risk attached to this investment. Your capital and your interest is intact. So you can't wake up and say, oh, I've lost my capital, or oh, I've lost my interest. No.
Because I'm so scared of losing my money.
So you won't lose your money. So the first one on our list today, I'll just say the basic one you all know, the Treasury bills or the mutual funds, then FGN savings bond. The most safest investment in Nigeria or all over the world is government investment, government securities. And the first usually the Treasury bills or the federal government bonds. But you can just put your money there and go and sleep. You're 100% certain that your capital and your interest is safe, right? So we're starting with, let's start with Treasury bills. So you can invest your money in Treasury bills or mutual funds or FGN bonds or maybe stocks, but stock is not low risk. Stock is medium to high risk, right? Okay, so yeah. So what is it all about? For Treasury bills, I'm going to be like differentiating between the T-bills and the mutual funds. So for T-bills, mutual funds and federal government bonds, these are the low risk ones. So but for T-bills, the major difference is that you're earning your interest upfront. Do you get it? So if I put 1 million naira now at 15%, you're going to get 150,000 naira for 1 year. So as I'm putting the 1 million naira, I'm getting credit of my interest that same day. Do you know what that means? Is that I actually even just invested 850,000 naira because I have my 150k back in my hands, and I can even choose to invest the 150k again. Do you get the difference now?
Yeah.
But with mutual funds, you don't get your interest upfront. It doesn't work that way. So that's what we call mutual funds. They are being managed by asset management firms. So you can see a list of all these money operators from the SEC approved website. So you can choose between First Securities, Coronation, AfriInvest, Invest Niger. There are these apps. You can download them. They are very safe. You can download them and just get started. So you can earn as high as 18% on your mutual funds per annum. In fact, as of last year, you could earn as high as 23% in your mutual funds per annum. Yes, the rates are quite dropping. So take advantage and start your investment journey today. Like now. If you watch this video to this extent, I think that you're getting value for your time. So please hit the subscribe button. Just try. Thank you. Yeah.
So you said the rate was like 23% and now it's coming down. Is there any reason why it's coming down? If I put my money, is it still going to come down? Because I mean, I don't want to lose money.
Okay, so this is how it works. The interest rate mirrors the future state of the economy or what the government wants the economy to look like, but it's not looking like that. So they are using it to control money supply in the future. So as of last year, government wanted to control money supply. So they had to increase the rate to enable them mop up the economy. So you bring in your funds to the government. Do you understand? They wanted to control inflation per se. So the rate had to be a bit attractive for you and I to put our money to the government. So there was this time for them to mop up money in the economy. But now the inflation, as at past 2 quarters, it has been slightly declining. So that's it. So the rates are now declining. Do you understand? Don't be scared, because even as a non tbills as at 2 weeks ago was like 17%, right? So that's bad to be compared to other markets. Nigerian markets interest rate is quite high. Yeah.
So let's go back to the investment distance, the investment journey.
Okay.
So I have 10K. Should I split it? Half, should I save half and put half in the investment portfolio, or should I just invest all of them? What do you think is wise?
Okay, so I usually tell people that if you cannot invest when you have 10,000 naira, you will not even invest when you have 1 billion. It's a mindset, do you get? If you keep thinking, oh, I need to be excessively rich before I can do stock, before I can do TBs, before I can do mutual funds, you will not end up investing. Do you get? But no matter what you do, you still have that buffer fund. That's what we call savings. But you know what mutual fund does for you? That mutual fund is like savings. So
Okay.
it's an investment platform because you're earning higher interest than leaving your money in the banks, right? But in a
Okay.
way, it's like you're saving that money. Do you know why? Because you can move your money to the mutual fund every day. In fact, every hour, I can transfer money to my mutual fund account. That's my investment account every single hour. In fact, I can receive an allowance today and I'm like, okay, I don't have to spend this whole money. I don't have to spend this whole 100K. Let me save 20K in my mutual fund. I move it to the mutual fund. It's quite easy, and the funds are still there, so I can also access them when I want. Do you understand?
So I can
It's just
always
that,
withdraw
yes, you
and
can always
put there
withdraw.
every time.
Yes, the
So
only
it keeps.
problem is that it's not instant, so I don't withdraw immediately and get it immediately. For so
Oh.
many asset management firms, some of them, if it's during the working hours, like you're withdrawing from morning to like before 2 p.m., you can get the phone same day. So let's just say on an average you won't get your money immediately, like 5 hours to 24 hours, that's when you get your money.
So I
So
can put
that's the
like
difference.
I can put like maybe 70-80% there, and
Yes,
just
so
hold
instead of
like
two,
20%
yeah,
for
so you earn a
those
higher interest. The interest is
emergency.
calculated daily, so you're earning an
Okay,
interest on it
okay.
every day. You can even choose to withdraw the interest and spend the interest and still leave your capital. To understand T-bills, mutual funds, FGN savings bond, and Nigerian stock market, I have several detailed videos on it. Just watch the videos. You can understand everything you need to do, how you need to go about it, the step-by-step processes, and how it works, the advantage, the tips, and everything that you need to know about them. You can click on the video and watch it. You
So
understand
what
it?
do you
It's
think?
very
Which app or which bank, or how do I go about the investing this? Where do I start from? Where am I, you know, what do I do? Which
okay.
app?
So funny, these days, thank God for technology. To invest in anything you want, just go and download an app. It's so easy. So, like I said, you can see the list of all approved money operators from SEC website. Do you understand? Or if it's for the stockbrokers, you can go to NGS website, which is for shares, to see a list of approved stockbrokers. So I have some I can just mention in this video. I said we have the First Securities, we have the Coronation, we have the Invest Niger, we have ARM, we have Meristem. Just download their app and just sign up and get started. You get an ID that is tied to you, like an account number. So just go to your
Okay.
normal bank account, transfer money to that account. That or it reflects.
How do
It's
we?
so easy like that. Then from the app too, you can also track your funds. You see the interest that you've
Okay.
earned. It's very easy. Just to sign up, not even need, you don't need like a passport. Once you sign up on the app, just upload your ID cards, then your address and some necessary other verifications. Same day you can start your investment.
I've been hearing a lot about stock. How much do I need to start stock? Is stock really safe? Is stock better than TB and mutual fund? Like, how do I go about this? How do I include stock in my investments?
Okay, so first of all, like I said previously, stock is not a risk-free investment. It's not a
Okay.
low-risk investment. It's a medium to high-risk investment. You know the good thing about this medium to high-risk investment is that you can get high return. So the higher the risk, higher the return, and the much higher probability that you're going to lose your funds either ways. Do you understand it? So this is how stock works. Like I'm buying an ownership stake or portion, like a share of a company, depending on how much I buy the shares of the company. Do you understand? How many units I buy. So let me just say that for Nigerian stock market, you can start with as low as 5,000 naira. I have several shares that are below 100 naira that I can even start with. And another advice I usually give beginners, like, we have what we call stockanalysis.com, wallstreet.com, we have Bamboo, we have all these Invest Nigeria, all these apps I talked about.
Okay.
They do, you can do like a dummy stock investment on them. So they send you an email every day on how you performed on the stock market. Man, you didn't use your money, right? You don't know how to start. You're like, oh, should I do this bank? Should I do this telecommunications? Should I do this food and manufacturing companies? What of energy? What of oil and gas? Those ones that you think you want to invest in, but you're scared. You don't really want to start in. You can do like a 1 month dummy trade with it. Just go on this website, stockanalysis.com or wallstreet.com. Put all necessary stock you want to buy, the number of units you want to buy. Make sure that it's a bit reflective of who you are. Like, don't go and put, oh, I want to buy this company 1M, I don't have 1M. So that it looks a
Okay.
bit realistic. So you can cushion the effect of losses. Like, it makes it look like this is actually my money that I put in there. If you're scared, do you understand? Because it's your first time. But one thing about stock is that in 1 year's time, you will not regret that you did it. It's a long-term investment. In 5 years' time, you're going to be glad I started your investment journey as your 20-something years. So it's a very good way to start your investment journey. Just don't put more than 20% of your income in stock because you're a beginner. You don't understand the market. You can start with 10% of your income in the stock market, right? And always start with what we call value stocks. Oh no, growth stock, because you don't understand it. Value stocks are better for those who understand how the market works. But for the very first time,
So how
use
do we know which is which? How do we know which is value stock
and growth
and growth
stocks,
stock?
right? Okay, so what we call growth stocks, they are the stocks you already know. You know First Bank, you know
So
GT, you know MTN,
MTN,
you know Arada, you know
Dangote.
exactly,
Okay.
Nestle. They are all your growth stocks. You know, one thing is that they will grow. You most likely not lose your money. But for that jump in growth, like 400% in a year, 600% in
Okay.
a year, it's almost mostly emerging markets or emerging companies that can give you that high jump in growth. So we call those
What's
ones value stock.
examples of
So
them?
because you don't know them, that is it. Because you're starting. So you have to stick
Okay.
with the growth stocks once you understand more. So that when you wake up every morning and you check your app, your
The
money
money
is
is to be
still the way,
saved.
at least
Okay.
like +5 -5%. But
Okay.
these value stocks, people that can understand the financial markets, that's where they put bulk of their money. Because I mean, I want to earn high
Massive
interest.
income.
Yes, I
Oh.
want to earn,
But at the
yes.
same time, you can still lose all of it because people don't know it that much. Is that how it works?
Yes, because it's high risk. Like I said, those ones, they are
Okay.
higher risk. So the higher the risk, the higher the return, and the more probability you're going to lose your capital.
So in a way, it's like gambling.
Not really. You can't compare stock market to gambling.
But I mean,
People don't really lose their money these days in stock market. The market is a bit relatively stable, Nigerian market, right? In
okay.
fact, the all share index of last year did as high
About
as 58%. It's quite even
wow.
higher than most developed market like
That's
US
quite
and
high.
yes. Then for the, let me say, the consumer goods sector, they did over 124%. So
Okay.
do you know what that means is that if you're investing in stock and you diversified your stock, you didn't put it in one particular sector. Like you do like bit of food and manufacturing, telecoms, banking. At least even if you're buying stock with as low as 5,000, just pick like 3 or 2 companies to start with in different sectors, right? And don't forget that you earn in 2 ways in the stock market. That's what we call dividend and your capital gain. So dividend means that if the company made profits, I'm going to partake in it. So
Okay.
that's like a passive income. And it's paid twice yearly for most companies. So what we call
Interesting.
half year dividend and full year dividend.
And
So if the
that includes
company
your profits. This one's just like free money.
free money, exactly. So your capital is
Okay.
still intact. Capital can still grow by what we call capital gain. I bought the share 15 naira. Today is 100 naira. People that bought Fresco last year are better glass. They are millionaires now.
Hey,
Like, you get. So
interesting.
the opportunity exists every time. Just have to like start with the one that you're familiar with. Like I said, the growth stocks you're familiar with. Then with time, when you build that confidence, you can just take a bet on all these emerging companies.
Okay.
Yeah.
So I hear a lot about US stock, how it's safe to buy dollar. Oh, buy dollar, dollar, dollar this, dollar that. I mean, what can you say about that? Is it advisable, or should I just stick to the Nigerian stock market?
Okay, so for me, I usually preach diversify your investment. In fact, I have US stock in my portfolio. I have US dollar. I have dollar funds. like dollar. It's like a mutual fund. We'll call it dollar fund. Do you understand? Although in although the GS returns is a bit lower than Nigeria market returns, even in the stock, even in the dollar fund, like normal Nigerian mutual funds can give you as high as 17%, but dollar funds is the max can see now is 6% per annum.
Okay.
But the good thing
That's
about
very low.
no thing about diversifying your investments is that the dollar on its own doesn't lose its value. Dollar 10 years ago and now, the purchasing power is still
Okay.
relatively much stable. So like I
I
said,
get.
the risky the investment, the higher the return. So a dollar investment is stable. The purchasing power. Don't forget that it's not all about saying I earn 21%.
So dollar is
What's the
like a
purchasing
very low
power?
risk. Like,
Yeah. So what's the purchasing power of this my investment? When you give me of this my earnings, when you give me this 21%, what I could buy when I started, is it what I could still buy with it as when I'm receiving this in?
okay.
Do you understand? For
Yeah.
dollar, it's relatively stable. And it's good to plan your future, diversifying your currency. That's why I usually say different markets. But for a beginner, start with Naira. What I
So
can
when you now
understand.
have like a lot of money or more money, you can now
Yes,
enter the
not
US.
even about having more money. When you have more confidence, well,
Okay.
me, dollar funds is very easy. You can just do dollar funds in a year, but it's not what you can do in daily. Do you get? You can say
Mm.
this year I will do $300, $500, $1,000. You can start with the
Okay.
dollar funds, so you can go to the US stock. Same thing I said before. Any stock you want to buy, for the US stock event, that's why I was confused. So, like I said, you can start with $100, $300, $500, $1,000 with GS stock. Use Bamboo. It's an app that is Bamboo. That's what I use. It's quite very easy. You know what's even very good about Bamboo is that they predict the shares that you can buy.
Yeah.
Do you get? So they have a WhatsApp channel. They
Mm.
drop. You can follow several investment WhatsApp channel. I actually
Okay.
have one. The link is on my bio too. So they drop predictions for what you can buy, and it's my prediction. So it's not like it's 100% accurate because nobody knows tomorrow aside
True.
God. Yeah. So but dollar funds is relatively low risk. It's like mutual funds, but it's in dollar, so the interest is
Lower.
lower.
Okay.
Exactly.
So how about crypto? Cryptocurrency is also an investment, right?
Yeah.
So is it a safe investment? Is it high risk? Is it low risk?
So
How can I
crypto can
diversify
be
into
a
that?
low risk investment.
Wow.
Like just like stock can be a low risk investment
Okay.
either.
So crypto
But
and stock, which is safer?
that's a very tricky question, right? So the thing about two of them is that if it's for trading, which is safer, it's obviously crypto. Do you
Okay.
get which is safer? Sorry. If it's for trading, stock is safer than crypto. Crypto is very volatile. Is the
So
volatility is
it's
quite
not
high.
beginner friendly.
Nah, but if you want to see, it's actually even better for you to have a crypto account and have an
Okay.
investment in crypto. But let it be for the long term. Do you understand?
Okay.
Don't trade when you don't understand it because you will lose all your money. And
Ideally
if you
2K.
understand it, can also make all your money like times three. Do you get using a leveraged
Okay.
account or something? Yeah.
We talked about treasury bill,
Mhm.
how if I put my money I get the interest like straight up upfront.
Yeah.
Very interesting
Yes.
because I
Exactly.
think I can use the profit or the interest to now invest in stock markets.
Okay, that's fine.
Okay. So
Perfect.
we talked about FDM bond, how it's also low risk. I didn't
Okay.
really get it. Like I didn't really understand it. Like
First of all, FGM bonds is risk free. Unless Nigeria is coming to an end, that's when I can lose my money. And
that's
man,
impossible.
it's not coming to an end. So it's treasury bills and FGM bonds risk free. My
So
money
what's the
is
difference?
risk free is that it can before it happens, it means that it doesn't even happen and has not happened yet.
What's the difference between treasury
Means
bill and
and
FGM bond?
okay, so treasury bills number one is that it's a short term investment, right?
Okay.
So the maximum tenor is 1 year and I'm
Okay.
getting my interest
Of
upfront.
course.
So
Okay.
when we say bonds, first thing to notice that bonds is not 1 year. You have 2 years, 3 years, even as high as 5 years.
Can I withdraw if I put money there? Can
Mm-hmm.
I withdraw it?
As you take a note. So this is how it works: is that it's like it's a fixed investment. When I call fixed investment, is that we fix our rate for that 2 years. So people that bought FGM bonds last year
Mm-hmm.
when the rates were high, they are smiling at as rate is going down because they've locked up that interest rate. Do you get it?
I don't get
So
it.
let me explain how it works is that so the federal government savings bond usually open for subscription every month somehow from the first and the second week of every month, right? So
Okay.
that is how it works. So government through the DMO, they release the offer for subscription. So you can still subscribe to the normal asset management firms I mentioned earlier. When you go to the app, you see FGM bond subscription. So you subscribe for it. The minimum you can subscribe is 5,000 naira. That's the minimum, right? So how it works is that you bought bonds this January, federal government savings bonds this January. So what does that mean is that let's use 100,000 naira, right? Invested
Okay.
100,000 naira. The federal government bonds interest rate is a bit quite lower than the T-bills rate and the mutual funds rate. Do you know why? So
Why?
two things are involved is that because it's a fixed term, they are locking the interest for a longer term. So it even gives you direction of what the interest is going to look like in next year.
So we can't lock it for a year.
So
Is
you
there
can
like
lock
a
it for,
fixed
it's
year
a
you have
fixed
to
year,
lock
two
it?
years or 3 years. You can't do 1
So
year.
it's the government that will tell you how long it
The
should be locked.
interest. No. So government is going to bring an offer for subscription for bonds.
Okay.
Example, 2 years, 13.5%,
Okay.
3 years,
So you
14.5%.
pick
The
the one
longer
you
is
want.
always higher. Yes, pick one you want to subscribe for. Do you understand? But they pay this interest every quarter. So you're earning the interest 4 times in a year. So let's say you did for 2 years and the interest is 13%. Don't forget that the interest is quoted annually. So any interest you hear people saying 13% for 2 years is still an annual interest rate. So 13% per annum, but my investment is for a 2 year period. Does it make sense? Okay,
Okay.
so this is how it works is that I'm going to earn that interest 4 times in a year.
That 13%.
Yes,
You
four
get
your
times in a
interest
year.
in
Okay.
April, July, October, and January for the first year. The cycle continues. After 2 years, that January they get your final interest. You get your principal with it. So you're going to get an interest of say 13%. That's like 130k. So this 130k we paid in 4 different tranches across the 4 months. Not 130k per quarter
Oh.
divided by 4.
Okay. Because
That's
I was about to
no.
ask. Okay.
So it's 13% per annum. That's like a scenario. Do you get how it works now?
Okay.
But the good thing about FGN savings, but I didn't talk about, is that it's tax free. Your interest is
Okay.
not subject to tax.
I think I like this one because this whole tax thing this year
Your
is
interest
something else.
is not subject to tax.
Okay.
You get? So FGN savings bond is, that's one part of why it's even lower than the other ones in interest rate. Number one is that the interest is for a longer term. So that's why it's lower. Number two is that it's paid quarterly. It's not paid at the end. Don't forget that you receive money today. The value of the money is higher than someone that receives it tomorrow. So that's why even in TBs and mutual funds seem to have a higher interest rate because the interest rate is paid at the end. Meanwhile, I'm paying TBs upfront. So as interest rate is declining, I've already done TBs January. I've gotten my interest. But do you understand this?
Okay.
Unlike someone else, do you get the difference? I can
think I
even
do.
choose to invest that same interest and make another interest from it.
Okay.
Do you get it?
Makes
And I'm getting it
sense.
bulk. So that's it. So that's how FGN service bond works. It's paid quarterly and the interest is tax free. But for other investments, like your stock, when you earn your dividend, your mutual funds, when you get your
T-bills.
interest, your T-bills, when they pay your interest,
They're
subject to
taking
10% withholding tax.
10%.
On only the interest, not your capital. But it's still better than leaving your money idle either ways. Let's say you earn 150k as interest, you pay tax of 15k.
That's a
Government
lot.
takes tax, then you take 135k. That's how it works.
Ah,
But for FGN
has
savings
it always
bond,
been
it's
like that,
tax
or it's
exempt.
under this new tax
It has
rule?
always been like that.
Okay.
But FGN service bond is tax exempt. You're not paying any tax on it.
Yeah, what should I invest in? I like the tax free, but money is low. So you've talked about treasury bill,
Okay.
FGM bonds, stock market, mutual funds, and all of that. So if I invest small in all of this, or in this investment, and you talked about purchasing power.
Okay.
You talked about purchasing power.
Okay.
In the next 10 to 20 years, the purchasing power, is it going to be the same? Is it going to drop? Is it going to be high? Is it going to be worth it? How do I know?
Okay, so you're concerned on the value of your money,
Yes.
right? In 20 years' time. Because you know how life is now. When our dad or our parents or the older ones will say, 20 years ago I bought this car, this amount. And you're like, that car cannot even buy anything now. I get your confusion, right? But this is how it works, is that that's what we call compounding. So 20k in a year is like 240k. But
Okay.
when you invest and it's compounded, let's even use 15% as a scenario. I'll come to that. Let me just clarify your point first of all.
Okay.
So this is how it works. Because you're going to be earning interest on that money, your major concern is that let the interest be able to beat inflation. Do you get it? So it's not like
So
at the
how
end
do
of
I
the
know
year.
if it's beating inflation?
Okay, so it's not like at the end of the year, we're going to give you your capital. It's what we call compounding. Do you get it? So I'm going to talk about that like well. I'm going to explain that for you. Well, we're going to use a scenario to calculate that, like real life calculations. Let's use your 20K scenario. You're going to invest in 20K monthly and an investment that yields 15% per annum. So we're going to talk about how much this money will be in 1 year time, 5 years time, 10 years time, the nominal value that's without investing and the real value with investing. We talk about the difference and the amount. In fact, you get as high as 4.8 after 10 years.
Mm.
Investing, yes, that is it. Investing
Okay.
20K every month for 10 years. Did you see the difference? So that's
Yeah.
what investing does for you. It's called compounding. So the first investment mistake that people usually make is chasing fast money. I want to double my money in 2 weeks.
50K to get
MMM.
200K.
Ah! Because everybody just likes money.
I mean,
But
who
this one is not
doesn't?
even high risk. This is, I don't even know, red
Gamble.
flag. Another
Scam.
one is investing without understanding what you're investing. So let's say stock market. You don't understand it well, right?
Wow.
And you're going to be so concerned. Or I've lost 20%. I'll just panic and sell it immediately. That's what we call panic selling. Forgetting that
And
it's
that's a
long term.
loss.
Do you get
Okay.
it? Understanding that particular investment you're doing, knowing that the market is not always, it doesn't move like sequentially the way you think today I'm making gain, I must make gain consistently. No. So you have to understand that stock is a long term goal,
Investment.
long term investment. Do you understand it? That's the second mistake people make. Third mistake people make is putting all your money in one place. Like you're not diversifying. I usually don't advise that one. Do you understand it? Like putting all your money in stock market. Why? Especially as a beginner. You need to
True, because
balance
it
it.
can fall.
Another thing that we even have what we call liquidity, having
Okay.
cash flow. It makes you take advantage of opportunities that you don't even know is going to come. Do you understand it?
True.
So that's one of it. Do you get? So you have to diversify your investments. And the fourth investment mistake is ignoring compounding. So always trying to withdraw your interest. At some point, it will make sense to you because of the purchasing power and inflation I said before. So at the
Okay.
end, your money will just be left the capital and the little because we're already taking your
Money need bread.
interest. So the fifth
Okay.
one, like I think I've talked about this before, is investing money that you need very soon. So that's why I usually say mutual fund is the best. You can put money that you need very soon.
No.
Like make sure to have your money in different buckets. It's called mental is segmenting. Segment your money in different buckets. So
Depending on how you need it.
yeah, so the money that you're going to need urgently and it's for a basic need, put it in things like mutual fund, like I said. If you like up to like 2 weeks, 1 week before you can use it. Do you understand? Don't go and put in investment that are less
Okay.
liquid, like crypto. So we've come to the end of our video today. If you've not hit the subscribe button, please just subscribe. Like, just try. It's not that hard. Just hit that subscribe button. Please,
Subscribe,
let me say
like,
please.
comment,
Yeah,
please.
and I forgot to ask if
Share
you
the
have,
video to
yeah,
those that also wants to learn. I'm sure everybody will want to learn. Who doesn't want to make money?
nobody actually.
So
And if you have further questions, trust me, I'm going to answer your questions in the comment section.